We've got a series of fabulous guests. Right now, we're going to talk, though, about skyrocketing valuations. They have changed the landscape of private equity. We want to talk about it. PE firm General Atlantic has invested $34 billion in more than 360 companies since its inception 40 years ago, including Uber, Airbnb, and ByteDance. You may know it better as TikTok. Joining us right now to talk about it is the CEO of that firm, Bill Ford. Good morning to you.
Good morning, Ann. Good morning, Becky, Joe. Good morning, Bill.
We're going to be on a panel together in just about an hour and a half from now. And we're going to talk about the valuations of unicorns. So maybe we'll just do a quick preview, and then I want to get into a couple other items with you. But when you think about Uber, when you think about Airbnb and potentially becoming a publicly listed company this year, there's a huge question about whether the private valuations make sense anymore, and whether actually all of these funds are going to ultimately have to bring those valuations down to match the rest of the market.
Well, I think it's a tale of two cities in some ways. I mean, last year we had a case where it was the public markets disciplining an overvalued private market. Right. And we saw that consistently, where in many cases the last private rounds were above the IPO price, and even where some of the companies are trading today. So that was the first thing. But on the other hand, the growth rates have been spectacular for many of these businesses. Even Uber last quarter, 30% plus growth. ByteDance and Financial in China, 50% plus growth. So the growth rates are there to support reasonable valuations, but we just got ahead of ourselves last year in the private market.
Are you buying anything? Steve Schwartzman was with us just about an hour ago. He said it's expensive out there. It's
expensive. That's why we are focused mostly on growth and really underwriting that growth as carefully as possible. Last year, our portfolio, the average growth was 32%. And so we're really trying to do is to...
In terms of revenue?
Yeah, revenue growth 32%. So we really had solid performance, and many of them profitable, 2/3 profitable. So the growth rates were solid, and you have to, I think, the only way you can justify these valuations is company quality and company growth.
Given all of the focus on regulating and regulations around some of the big tech companies, which used to be the exits for so many of these companies, how has that changed the dynamic with which you think about buying something and eventually who you may or may not be able to sell it to?
Yeah, I think it's going to be a period of time where we're going to see a shift from strategic exits to the IPO market. And we saw the IPO market open up last year. We had 8 companies go public. 3 were Chinese, 1 Brazilian, 1 Middle Eastern, and CrowdStrike, 1 from the U.S. And I think we're expecting another pretty good IPO market. But I think we'll be a lot more reliant on the public markets going forward than M&A, at least for the foreseeable future.
How concerned are you about your investment in ByteDance? Also, this is TikTok, for everybody who doesn't know the full backstory of what this company is, but there's huge questions about this company, about where these images are going, whether the Chinese government has access to them, all of it.
First of all, it's a terrific company. ByteDance, 800 million daily active users, $15 billion plus the revenue, terrific entrepreneur. They've been very careful in how they've built TikTok. It's from the very first day been built outside the Chinese firewall with very, very careful curation around data privacy and community rule sets. So I'm pretty optimistic they've built this in a way that's different from some of the other social media companies and very cognizant about the sensitivity around data privacy. So I think you're going to see this company continue to do very well.
Bill, can I ask you about the Airbnb IPO? I know you're an investor there. We've got Arnie Sorensen, who's going to be joining us a little later this morning. And obviously, they're working at ways to kind of compete with that, too. What does Airbnb do with the money? Do they pay out a lot of the investors that came in with the IPO money, or do they use it to reinvest and find other ways to expand their brand and their market?
I think they're going to continue to reinvest and continue to grow internationally in particular, and also with some line extensions. I mean, it's a wonderful company, had a great growth year last year. I think they really have been methodical about preparing for the IPO. I think they're ready for it, and I think it'll be an exciting one.
Is your expectation that it is an IPO or that it turns out to be a direct listing?
I think they're still debating what the right way to go is. I wouldn't be surprised if they choose a direct listing path because they don't need to raise a lot of capital, Becky, to your point, but I think they're still hashing that out.
Right. Does it matter to you?
Not really. I mean, it's still going to be building a case for the investors to understand the company and its long-term prospects.
Do you worry about the regulatory overhang? I mean, a lot of these companies built their way up, and they were too small for the regulators to kind of come after them. Airbnb has faced a lot of pushback from communities where they've been operating, and how do they do this thing where they bring in all shareholders and the community and all of these other aspects, but still deal with the way that it's been abused at points?
Yeah, I think all these large tech companies are going to have to really make a priority of government relations and understanding regulation. And I think Airbnb has done a particularly good job on that from the very beginning, recognizing that governments were their partners in many cases. But this is going to be, I think, a theme for all of 2020.
Although there's places like San Francisco where they blame them for the fact that rents are so catastrophically, incredibly high. That because people can rent their places out and have anybody coming in, it means that people can't afford to find a place to live there.
Yeah, and they've tried to be a good citizen in places like New York and like San Francisco and make the case where they're additive and they're helping middle-income families actually make money for themselves. So I think they've done a good job, but they've got to recognize that they're going to have to invest significant management time and senior leadership in those relationships.
One of your colleagues is still on the board of Uber. Is that correct?
Yeah, Anton Levy.
Yes.
Yeah.
What's your take on their future prospects and given what's happened to the valuation of that company?
I'm very bullish on Uber. I think Dara and Nelson Che, their CFO, are doing a great job rationalizing their portfolio of strategic investments around the world and really tuning the business model to move towards profitability. And I think you saw, $100 billion GMV, nice, last year, nice growth. I think it's got really good prospects. And even today's announcement about selling their food delivery business to a local competitor in India and converting what is a money-losing business into a strategic investment. It's a good move.
So scaling back, not scaling out.
Right.
Yeah, focusing. I mean, focusing, win in the rideshare business. It's still growing globally, and they're the market leader.
But what do you, by the way, that sort of is suggestive of a larger shift, which is if investors are forcing these companies to move faster towards profitability rather than growth, what does it mean to the long-term growth prospects of these companies and the long-term ability to have this sort of sky-high valuation?
Survival.
Well,
that may be. Well, if you think it's just that the patience of the investors changed.
Well, I think capital discipline is back. I think one of the stories of 2018, 2019 is that companies lost focus on business model, lost focus on capital utilization, lost focus on governance. And I think what we're seeing is a pendulum coming back and saying, capital, how you use your capital matters. Focusing on your business model and how it ultimately gets to profitability. Gross margin profitability, operating profitability matters.
But by the way, it was some of the investors that pushed them to growth to begin with. Masa-san, that was a huge thing for him. He just wanted them to get as big as possible.
I agree, and I think there's been basically a recognition that good governance with entrepreneurial management, capital utilization, discipline is really going to be important going forward.
When we look back 10 years from now at the sort of vintage that Masa and SoftBank have supported, what's going to be the lesson?
Well,
is it going to be a great success or a great failure?
I think a couple things are going to come back to it. Valuation matters. Two, how you use your capital matters. Quality of governance matters in the ultimate investment outcome. And so I think we're going to look back and say he invested in some terrific companies at the wrong price and didn't impose the kind of discipline that is helpful to a company as it evolves in its development.
Okay. Bill, thank you for being here. We will see you in just a little bit on the stage.
Looking forward to it.
Thank you.
Thank you.